Good morning, or actually, good afternoon, traders. 30th of May, coming into the end of May as well. And this market has pushed yet again above 4,200. And we've seen this before over and over again. And this market continues to be super resilient. And I think last I was on, we were in this little flag kind of congesting a little bit. It was chopping around. Market was trying to get a read. Where does it want to go? One thing for certain, it could not take 4,100 out. These lows are a little bit above. The cash is at about 4,100. Futures running about a little bit of premium above it. And, this is kind of right in the day where they were discussing raising the debt ceiling. It wasn't official, but it became, aware that the talks were positive and that there was, it's pretty amazing. It just seems like it just continues to be drama with the raising the debt ceiling over and over again. I mean, when you look at the history of it, how many times have we actually defaulted? But it's just a little political tug of war, and they just drag it along. And the irony of it was is that it never was really confirmed, but the market kind of factored it in that it was going to be done, which was a foregone conclusion. Although I think today it was official. But that being said, the market broke out of this tight range and it exploded off of 41.55, which is a number I just keep seeing popping up over and over again. And you can see they rammed them all the way up to 4,200. And then it was almost like buy the rumor, sell the fact. And then we started to roll again and we couldn't hold 4,200. And it was actually interesting because, you know, I, as much as I try to evaluate the markets, I try not to have too many opinions, but you know, I always pay attention. What is the market telling me at price? And I always want to trade with the trend, and the trend was positive. So I remember this day last week before this thing rolled, they finally came down to a level where you can get a long, and that was 41.90, which is probably going to be the big number coming back down. You can see the same A's coming up into it. But I took it, and there was still a little gap left up to '04 or '05, which was settlement from the previous day. They couldn't get through 4,200. But that day, the NASDAQ was telling me something, and I'm paying a little more attention out of NASDAQ than I am to Dow. Dow's in its own world, but NASDAQ just is really kind of pushing us. And they were signaling. You could see the NASDAQ was struggling that whole day, and I just basically kept playing it here off of this level. They kept trying. I was taking profits. I was managing my trades a little better because I was paying attention to this. I thought we'd come up to '04 and then roll. It never happened. And it just eventually collapsed. I walked away. I raised my stops. I got punched out. I missed the entire move down. I walked back. I just was like, I wasn't surprised because the NASDAQ was showing it. And there was a 2 day rundown back in here where it really looked like, okay, here we go again. And lo and behold, we held 4,100 and boom, we just cannot take it out. And the buyers came back in and they jacked it up into the Memorial Day weekend and really marked it up big time on Friday. So we're back up here and you're back towards looking at it again. And it's all about what are we going to do? Are we going to hold up at the extreme level? So let's take a quick look at today. And, once again, what I show you here is really how you really need to take a pay attention to. It's just recognition on your behalf. It's why does price keep continue to show reactions at these levels? Because they do, and it's consistent. And you can, if you pay attention to this, you'll learn a lot about how price is trading intraday. Now, the other thing you can pay attention to, and it's not if volatility has come down, is the market tends to move in a little tighter of a range, and it'll be more consistent with their moves. And the market will S&Ps will tend to move, and especially when the levels are trading in increments of 10, so will your price. So ideally, we gapped higher. So your first instincts are going to be, are we going to hold these levels? Now, we don't know. I mean, they pushed them up all overnight. Who knows? I mean, could they jack them up and run them up to our two? Absolutely. There's a lot of enthusiasm in the market, but will they? What they do is, if what they do is right in here, and this is what you're paying attention to, But this happened before the open. This is a first sign. Okay, they rolled them down. Then they came in the morning, and they just squeeze all these shorts out, ram them right up to here, and do it again. And here was your signal, right in here. Get short. Now this one came in fast. You probably might not have gotten this, and I don't believe in chasing price. But I trade more off these 1 minute charts now than I do off others. Other platforms will show you momentum, and momentum will tell you a lot about whether or not this price in here, this choppy price, is going to continue to roll down. And if the price is staying under these MAs, and I'm sure on other platforms are showing you a lack of momentum, which is also an indication that the market is probably setting up to go further down. And we already know there's a gap that comes all the way down to about 14. Will we go there directly? Would we go there at all? We don't know, but inevitably we should. But the first stop is going to come to the location. Location? Location. And here's your short, although it must have been right in here where I would have paid more attention to it. And we came down to the pivot. Now, you got to make a decision here. Are you going to take the long? Do you think this market is going to run back up? You got to be close so you can see prices struggling. And here again, they showed you that the pivot wasn't going to hold. And here's your next short, around 28, 27 or better. This was a beautiful trade. If you stayed with it, I mean, if you managed it, you probably could have got 3, 4 handles easily. And if you're a little more patient with it and you move your stops around, maybe back to a scratch, you're still golden. Although it came pretty close to getting you, for runners. This is for runners only. And this is for you to take the remainder of what's left in the gap, which they still didn't fill. And then fill. And then you got another giant run up that came right back to the pivot. And once again, look at this. Same as before. Another short right there. Same thing. Straight down to S1. And then you get the possible long up in here, up to ride up into there. This is what you want to look for with the trend. S1, it's the first support level. You're in a bull trend. You want to trade with the trend. And the rest of this day is kind of chop. And you can just see that. And now the market's just kind of finding itself. And now we're going to want to pay attention to this right in here. Is this market going to hold S1? So, what you want to do is you kind of want to key on. I like watching the NASDAQ to give me an idea of what's kind of happening. So, you know, you can see the Nasdaq's kind of in between levels here. They're above their pivot, but the Nasdaq's, look at them. They're just exploding. So, the mark, they're. I always like to see whether or not they're showing me something much like what they did last week, and it was the tell. They struggled, and it was actually a short. Once it got 41.90 was the level, it was a short. I wasn't on to take it, and it was a great short. And it came down into this huge area, and you had all these MAs, and they failed again, and they rammed them down to this MA, which held. So, the moving averages are always the big picture, but right now, what you're trying to pay attention to is how is the market trading intraday, and that's really the most important thing if you're trading futures, NASDAQ, and our SPOOs. Now you got to understand something. The NASDAQ, as much as it moves, it's way, way thinner, and you really need to spread your stops out accordingly, and you can easily get they can swing 10, 15 handles on a heartbeat. I mean, look how they move around. They don't, there's like nothing even in between some of these price levels. So it's a whole different game. There's opportunities here, but I tend to, if I'm going to trade the NASDAQ, it's going to be absolutely from a significant location, and it'll be the moving averages where I want to take advantage of the NASDAQ. Not that it doesn't trade well around the daily pivots, which it does. It's no different. Every market's going to react towards these pivots. This is part of what, you guys recognize the trade. So, bear in mind too that when you put your trades on, you go, and it's the beauty of trading from these locations is that you can see by just being patient enough, and I'm just recognizing this, you take your short, you have to manage your stops accordingly. And it's important that, and I tend to put them a little wider because of these locations, but because if you run them tight, and they know how to shake people out. Too many traders put their stops tight and they get shaked out on one simple uptick or one simple downtick. You got to give yourself room. Stops should be where the market should not go. And you want to, if you take the 28 short, 32, 33 stop. If they run up and take you out, they take you out. It wasn't meant to be. That's how trading. It's not a perfect science. But, at least gives you the opportunity to not be shaken out if the market decides to kind of meander around this price. If you're wrong, you're wrong. That's the nature of trading. But, once again, if you took the line down here, You put your stop where it should not go. Should be somewhere around 42.10, give or take, whatever long you took. And, that's what's important about it. And it's all about your management. You don't always have to trade location to location. You could take the two, three handles and be on your own, and that's what it's about. It's being consistent. It's not being a hero. It's not going for the home runs. It's about being consistent. All right. So once again, whether or not we hold 4,200, market can come down to 41.90, probably still be good. It's the same game. Will we hold these levels? Nothing has changed. The market's factored in a lot of positive news. So, be careful and, let it tell you what it wants. Don't get ahead of it. You can see right now as we talk, we're trying to struggle at this level, but pay attention. They can easily get you caught in on this, although this is trending down right now. Let's see what the Nasdaq's doing. Nasdaq's kind of under. Nasdaq's trying to move as well. So is this a possible short right here as we speak in live? So right in here, short around 1617. I mean, anything if they confirm above 17, this thing's just I think it's just chop. It's probably not worth taking it. So, I'm seeing, like I said before, watch what it does here, and you can see they're actually trying to roll up. So, this actually could be a breakout buy. Either way, it's all how you want to trade it, what you see and what you feel. I think it's chop. I think you let it go. But, it's the middle of the day. Sometimes they mark it up at lunchtime. I really don't know. So, this is in a nutshell, guys. I hope you guys are getting some type of insight into this. I know there's a lot of platforms out there. They do great work. I'm not here to judge any other platform and how they, how they perform. There's opportunities. It's all about how you go after it, and you have to be consistent with your trading, and you have to act. You just can't be hesitant. All right, guys. I hope you do well. Have a great week. Take care.